Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, February 14th, Valentine's Day. The year's 2022. Let's talk trading. Price part 7. These videos are for educational purposes only. Your results may differ from mine. I changed this from white to pink just for Valentine's Day. So let's run through the charts real quick, and then we'll get into a discussion on price. For the month, the pound is 81 pips above the open, 119 off the high, and 90 off the low. So as you can see, yesterday, Sunday, when I made the video, price was about right in the middle. And you can see here, it acts like it wants to come out of that upper wick zone on the monthly candle. And that 125 number, if I remember correctly, we're right near the yearly open. All the gaps had filled. When I made the video last night, I believe there was 2 or 3 that hadn't filled. Yes, we're right about 2 pips above the yearly open. As you can see here, we definitely have some interesting activity here. Last month, we put in that opening range for the month, which is now the opening range for the year. We've got the opening range for the month right here. We dipped into it. We came back out of it for the for February here. Actually, we dipped out of the low for the year, and we came back into the low for the year. We dipped into the low for the month, and we're still in there, and we're putting in the weekly range as I speak. And see, we're right there smashed on the yearly open. Which way is price going to go from here? Anybody's guess. And it should be interesting. 47 pips below the daily open, which is also the weekly open at the moment. And here we go. Looks like we are dropping. The inside bar that happened, the weekly inside bar from 4 weeks ago, we entered it. We now exit it. We are still in the inside bar for the month from 4 months ago. And look at all this blue. And actually, I know why this is all blue. I'm on the wrong, I'm on my actually live account as opposed to, well, actually, they're all live accounts, but this is my main trading account as opposed to the one that I normally display. We've got 3 pairs, 100 or better at the moment. The pound clocking in at 77. You can see we crossed below that weekly open here, crossed through the short zone, and we've just been heading south ever since. Now, since just a few minutes ago I said we're at the yearly open, we've already dropped about 8 pips off of that. So hopefully somebody may have taken that trade. Green rats, sit on your hands, get ready. As we're between the 2 rat zones at the moment. Notice how the smart rat is definitely shrinking the upper rat zone, the high top. It looks like it's only about 8 pips there, whereas here we're about 9 pips. So the this is due to compression of the range, and so the smart rat is adapting. We've already taken out the monthly pivot, taken out the daily and the weekly pivot here. Daily, weekly, monthly. All the pivots have been taken out. The current pivots, that is. The wick zone, as you can see, in and out, in and out. Looks like that was a touch and then back down. 7 pips below the yearly open here. You can see we put in a lower high. It's like we're going to, when this bar closes, we'll have a new lower high. Trading the simple price action with the wall mall lines, you can see was called a short at 30, and we're about 16 pips below that. Never quite broke out of the previous H1 high or the 40 launch pad. So you can see here, failure to launch, failure to launch. This was a successful launch here out of the 40s up to the 70s. We're definitely in the ATR zone, because the problem being is this broker has a Sunday candle, and so that's why we've got this ATR too, because of that small candle. Now, I want to show you something I've been working on. Here are some of these indicators I'll be posting. I think one, maybe two, might be donational. I know it looks like I've got a squiggly, but let me explain. It's not really a squiggly. It's there for visual learning purposes, just to confirm something I see, and see if I can maybe even see something else. Now, I've been telling you, if the close minus the EMA 5, if the absolute value is greater than 5, you want to look to reverse. And so you can see right here, it's 7. So this candle's almost closed. What I would be doing is, right about now, I'd be going long to reverse. Now, of course, it could go against me. And that's, that's part of trading, but I'd be looking for that. I might let it close and then pop in right at the open. So see, right now we're at a we're over -8. And so you can see here, here's the close minus EMA 5, the magenta line here. Now, the high minus the EMA 5 is this red line, and the EMA 5 minus the low. So remember, I said I'd probably jump in. Now, of course, the EMA moved down, but you can see the movement already, that it's reverting back to the mean. And I'd probably be out with a couple of pips already. It's one of those things where I just don't take the chances. But you can see here, this line was up here, the EMA was down here, so we had this huge spread or gap, or not spread or gap, but let's just call it distance. So we were way below the EMA 5. The low was below the high here was below the EMA 5. And so once again, when I see EMA 5 line touch here, and this line, either the EMA minus the low get up here, or the high minus EMA 5 come down here, I'm looking to revert to the mean. And so you can see it almost hit it. That would have been good for about 4 pips maybe, but it took it all back. So you have to be in and out quick, especially if you're trading against the dots. And you can see here on this indicator, let me just show you all the indicators so you can see. And some of these, this was a couple from last year. This is a new one here for this year. Actually, I've got the same. I've got these two indicators here. Which one? I guess I could probably take that one off. Maybe I should have taken the other one off. It doesn't matter, really. But you can see, I don't have those. I think I overwrote the statistics template. But I know if I see the EMA 5, this line here, that gets above 5, and this line gets above 2, then I'm looking for price to revert. And so right there, we're at 6.1. We're at 2. I'm looking for price to revert. Now, what are these lines here? That's an indicator I just wrote over the weekend. I had an idea. It's the high, 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 low, low, low. Basically, it's a recent price action. So from the low from 2 bars ago to the low to 1 bar ago, high 2 bars ago, high 1 bar ago, low 1 bar ago, current low, high 1 bar ago, current high. It's just a little quick visual to see what price is doing. So here we go again. What did price do? We're looking at price. Price came down, it ran back up, now it pushed down, made a lower low. So at this point, we've got about almost 2 minutes left in the candle. It's at -7. It's about time. Maybe I'll give it another minute. Then I might shoot my long trade in again to revert to the mean. And the thing is, almost swimming against the current here. And that is one trade. That's the reversion trade. But the other trade is, you can see this was all going, lower low, lower low. When it made that higher high but came back down, shorting at the indicator 2 value here at 17, you'd be up another 7 pips. And that would be trading with the flow. So you can use this either getting in at the indicator 2 level when price reverts to it, and you want to, as they would say, you would go with the bias, or a quick scalp reversion trade from here back towards the EMA. And so that's why I've got between 5 and 10 and -5, -10. That's shaded. I basically just wait and see, watch price get down here and then revert. So here's a nice example where it came down. You can see here, this was almost outside of that area. That was a nice trade. And then the same thing almost happened here where it was down. And then on the next candle, it reverted. So that's how you play that. So right here, let's see if it gets greater than 5 or 5 or greater. Remember, it was on this candle, so somewhere in that last minute, you probably wanted to get in. And you can see here, it's moving back towards. Finally, what I did was I was looking at some other traders' videos about risk and money management. And so this one trader was talking about using an ATR stop. So what I did was I followed his formula, but then I put a twist in it because I'm using the EMA. So I have it so you can either use the closing price or you can use the distance from the moving average to help calculate your stops. And so right here, it's saying you want to risk $16.47, dollar per pip, 1.33. Your short or your stop loss on the long would be here. Your stop loss on the short would be here. And so basically, if you're going in, let's just say 1 mini lot, you've got 16 pips stop. And this is telling you to go in 1.33 mini lots. So you probably have somewhere whatever the ATR stop would be, and I don't have that displayed. And so fellow traders, out of time, I hope that helps. If you have questions, ask. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne over.